You're listening to REI USA Podcast, your prime resource for genuine real estate growth. If you want to jumpstart your real estate career, whether in active or passive investing, this is the right show for you. Join professional home renovator Stacy as she talks to REI USA teachers and expert investors willing to share their tips and tricks to get started in investing, sharing actionable advice in every area of real estate, all while putting legality, habitability, and safety above everything else. Combine their unparalleled advice with your strong drive for success, and that incredible real estate fortune will be yours. Now, here's your host, Stacy.
All right. So today what we're going to do is we're going to go over some challenges of self-storage investing and, why, everything and in all of real estate investing, everybody always tries to make it like totally awesome, right? Oh, this is the best niche ever. But the truth of the matter is that unless you do the work, it's not going to work, right? So here are some of the things that you're going to have to focus on if you want to get into self-storage investing. The first thing is that you have to find motivated sellers. Guess what? Self-storage owners are the least motivated owners of all in the industry. There's no reason for anybody to sell if their property is running and making money, because it's really very, very little work to run a facility. In fact, I have a student right now that works at a facility. It's a 475 unit facility, and he says that he's bored all the time. 475 units, and he says the first week the first week of the month, it's a little crazy because that's when everybody's making their payments and stuff. He said, but after that, he said the next couple of weeks are like very boring. And that's 475 units. Okay. We actually didn't hire a full-time person to help us until after we had 600 units. So just think about it this way, is that, 600 units or less, which is a very, very huge facility, all right, or several facilities, you could really manage it on a couple hours a week. But that's why self-storage owners are the least motivated owners out there, right? Because for the amount of work that you put into it and the amount of money that you make, there's no reason to sell. Now, motivated sellers in the self-storage investing world would be mismanaged properties, right? They just can't figure out how to manage them properly, or they're older and they're just like over it, or maybe there's just some issue that came up and they just can't do it anymore. All right. Finding those motivated sellers is really kind of the key, but it really kind of depends on what you're interested in. And we'll get that too. Do you want to talk to motivated sellers, or do you want to talk to unmotivated sellers? And we'll get into that. The next thing is closing the deal. All right, because commercial real estate investing is completely different than residential investing. All right, it takes months to close a deal, unless you have cash to close the deal. But most people don't have hundreds of thousands of dollars to close deals or more, and commercial real estate is expensive. Okay, so a lot of people have this kind of thing in their mind, like, how do I even afford a storage facility? Because it is expensive. And the truth of the matter is it is, right? So you've got to learn how to do what we call creative deal structuring, or you have to learn how to raise money, lots of money. But closing the deal on the commercial side is rather hard, because it does take anywhere from 90 to 120 days to close a property. Okay. And really you want to have as much time as you can to close, because you want to have that due diligence time. All right. And doing due diligence on a storage facility, or doing due diligence on the commercial property, just takes a little bit longer. So typically our due diligence periods are around 30 days, if not 60 days. Typically I'm asking for 60 days due diligence and closing in 120 days. Okay. So these are not properties that are just like, you're closing every couple of weeks. You close a couple of these a month. A couple of these a year at most. Okay. And then when you're making offers, right, you need to be able, when you're talking to owners, you need to be able to make several offers at one time, right? Just going and making a cash offer just doesn't work anymore on the commercial side. You need to make several offers and be able to do that. All right. So learning how to make lots of different types of offers is key in the commercial real estate investing world. and then doing all this from home, right? Yeah. So this is what you want in the storage investing world. You should be able to manage everything that you have all from the comfort of your home, but you have to learn how to set that up, and you have to learn how to do that. And the truth of the matter is when you think about storage investing, it's find them, fund them, run them. Right? That's the 3-step process. Find them, fund them, run them. Running them is the most important part, because when you buy a storage facility, you're actually buying a commercial property. You're buying a retail property, and you're only going to make money if you run that thing properly. And if you don't run it properly, then you're not treating it like a business. And commercial real estate and self-storage investing is really all about running business. So it's about your P&L, your balance sheet, your rent roll, your profit, your loss, your expenses, right? How do you increase your income and decrease your expenses, right? So it's really running a business is what it is. Okay, so those are the challenges. So today we're going to talk about we're going to talk about some of the mistakes that people make, the challenges of finding properties, how to virtually find your facilities, and why focusing on passive income is the single most important thing that you should be doing right now. And why invest in self-storage? You want, and the truth is that, and actually, let me just go to this next slide here. During the corona, I guess the COVID period here in the last couple of years, you can see on the commercial real estate side which types of industries are struggling and which ones are actually doing very, very well. And as you can see at the very bottom, there was only a 16% change, like a 16% drop in self-storage. So cell towers, data center, self-storage are all kind of still doing well. In fact, during COVID, we had no change at all in what happened, in our facilities. And we had a couple of people that, couldn't pay or didn't want to pay. But the truth is that, pretty much everybody's going to come up with $50 or $100 or, $150. They don't want to come up with $1,000 or $2,000, right? So that was the issue. So like, instead of paying their mortgage, their rent or their mortgage, they were paying all their smaller bills and then just not paying that bill, right? So that's really the truth about what happened during the COVID period. During COVID. Another thing I wanted to point out is Marcus and Millichap, which is a commercial, a commercial data. I mean, it's a brokerage, but they also do a lot of data and look at numbers in the commercial world. And they basically said that, interest rates are at an all-time low. Real estate investors have a significant acquisition and refinance opportunity. We know that, right? We know that. There's a lot of acquisition going on. And real estate is a long-term investment that is particularly well positioned to withstand financial market turbulence. So I like to keep my eye on Marcus and Millichap and really kind of see what they're saying, because they do a lot of stuff in the commercial space. And while the Marcus and Millichap forecasts commercial real estate to remain stable, barring a major economic disruption, its outlook for self-storage is particularly positive. Space demand for self-storage units will experience little, if any, impact on the coronavirus. The national average vacancy rate closed to 2019 at 9.9% and is expected to drift up to 10% in 2020 as the elevated flows of new facilities continue to tap. And it just keeps getting bigger and bigger, honestly. So the numbers for 2021 have not come out, but I'm assuming they're going to be even higher than that. And increase, and basically what's happening is that the self-storage investing world is growing very, very fast, and there is a lot of opportunity. All right, and you can check all this out by going to InsideSelfStorage.com. Inside Self Storage is the nationwide, association for storage investors. So if you truly are interested in investing in self-storage, check out InsideSelfStorage.com, and then they have a coronavirus page as well too, just so we can keep tabs on what's happening in the industry. Obviously the steel prices have gone up. But the truth is that people are still building because there's so much demand that it kind of works out. It works out that the numbers, including the sale prices, are making it even more economic, which is different from like residential, right? Because like new construction, it's very expensive right now to build, and so that the prices are just going up higher and higher on the houses. Okay. One thing I love about commercial real estate investing too is that it's all based on income. All right. So when you do comps on a commercial real estate property, you're not doing comps the way that you do residential. You're doing comps. I mean, you're looking at the income. The value of the property is based on the income of the property. Right. And then you have to learn, you have to learn basically how to look at those numbers. If it's making $100,000 a year, what is it valued at? And that's what all lenders look at, right? So even dumpy properties that are not as like beautiful as the other ones, like, so for instance, you can see this picture on the left. This is a storage facility that I bought. It was an abandoned storage facility, and the owners completely abandoned it. And it's 76 units. I picked it up for 150 grand. I mean, it's worth 550 grand right now because it's making about $5,000 a month. And, so essentially I'm going to be making probably around 350 to 400 grand on this facility. I've only owned it for a year. And that's because the value of that property is based on the income of that property, right? So we'll learn about that as we go through. Okay, so how do we weather the storm? Oh yeah, so characteristics of investors and how they get through this. And I talked about this last time, but I always want to bring this up, all right? You have to act early, right? We all know that something's going to happen in the next couple of years. We don't know what. Maybe it's just a 20% decrease in like prices of residential property. Maybe the stock market crashes. We have no idea what's going to happen, right? But the truth is that you should be preparing now for what's going to happen, because something is going to happen, because it's just historical, right? There's upswings and downswings, and you want to be ready when the downswing comes, right? You also want to look at your long-term perspectives. You want to make sure that you're always keeping an eye on what the market calls for and what it's looking like. I try to educate myself on a regular basis on other people's perspectives, whether or not I believe them or not. I want to know what everybody is thinking so that I can formulate my own opinions. All right. And another thing is that we focus on growth, right? And especially in the self-storage investing world, it's like, how can we keep moving forward? How can we make sure that we're growing, and how can we run our business better? How can we make more money? How can we decrease our expenses, right? Okay. All right. We're going to talk about finding the right market, properties, wholesaling, creating an LLC, get a hold of an owner. But before we do that, let's have some fun. All right. We've got a quiz. You guys can wake up and tell me what you think the answer to this is in the chat. All right. There's 11 of us. So let's do this. How many storage facilities are there in the United States? Is there any guess? How many storage facilities do you think there are? I put it into the chat so I can see what your guess is. I'm going to wake up. I'm quizzing you guys to make sure that you guys are awake. How many storage facilities are there in the United States? If you've been to my sessions, you've probably heard me say this, but I'd like to see the guess in the chat. Does anybody have a guess? Any guess at all? Just pick a number. Okay, 1 million. Okay, that's a lot of storage facilities. Okay, good. Who else has a guess? Anybody else have a guess? How many storage facilities are there? 50,000. And who else? Another guess? Anybody else? Any other guesses? Nobody? 20,000. Okay, good. Okay, good. We got some good guesses here. So 20,000, 50,000, and 1 million. What else we got? Okay, so there are, let me tell you, who won the $1 million today? 50,000 storage facilities. All right. There's more than 5 times the number of Starbucks. That's it. Wow, there's not that many Starbucks out there. I feel like they're on every corner. Okay, so there's around 50,000 storage facilities in the country. So just think about this. And I tell everybody this when I talk to them all the time. That's why Becca got this, because she talks to me a lot. But there's 1,000 storage facilities per state on average. Okay, there's 1,000 storage facilities per state on average. 30% of those storage facilities are owned by REITs, right? That's like a hedge fund. That's like a fund, right? And the REITs are the big names, CubeSmart, Public Storage, Life Storage, U-Haul. These are all like big, huge funds or REITs or some kind of trust or whatever it is, investment trust, okay? And so what that means is that out of those 1,000 in each state, obviously California will have more than like Delaware, but like, out of 1,000, 300 of them are owned by REITs. All right. So that means only 700 storage facilities are owned by mom and pop owners, just like me. All right. And then out of those, I'm assuming probably it's the 80-20 rule. Okay. 80% of them have more than one facility. 80% have more than one facility and 20% have just one facility. Now, typically you'll find like, some of them have like one or two facilities, and then you'll have, less and less will have more and more facilities. Okay. So what that means is probably, let's say half of those are just, half of those are regular people, right? So out of 700, 350 to 400 of them, you can contact and see if they will sell their facility. All right, because you want to go directly to the owner in order to get your facility. So there's only 400, maybe 500 owners in the entire state. That's it. On the residential side, you can buy 10,000 names and still never, you have a little dip in the industry. There's only 500 names that you can contact in your state. So people are thinking, oh, I want to buy something that's near my area. Well, if you buy something that's within an hour of where you live, then essentially you have like, there might be only 20 or 30 people or 40 people, 40 facilities that you can contact. That's it. So it really kind of gives you a very minimal chance of finding something that you want to buy. So you want to reach out to the entire state, and you want to talk to every single owner out there. All right. So just to give you a perspective of how small this industry is, there's probably only 25,000 people in this industry that invest. Now, there's a lot of people that want to invest. People want to invest in everybody wants to get in self-storage. The ones that actually do it are probably half of this number, and that's it. It's a very, very small community, which I love. Okay, what's the average number of items in an American home? Anybody guess? How many items are in your house right now? If you had to guess and count every single number, what is that number? Can you put it into the chat? I would love to see what your guesses are. If you looked around in your house and counted every piece of item, what would be the number? Any guesses? Okay, 5K. Christy, you only have 5,000 things in your house? Okay, what else? Who else has a guess? 21,000. Okay. All right, we're getting closer. 300,000. Becca. Okay, good. Who else has a guess? How many items do you have in your house? Okay, let's go. Let's move on here. 300,000. So an average home has 300,000 pieces of items in your thing, right? So I've got like I got my water tabs here. I've got some prescriptions here. I got this desk actually right here probably has like 50 things on it. I'm not going to show y'all what this looks like, but it looks crazy. All right. And so already on my desk, I have 50 items. Yeah, we crazy, right? In the United States, we got a lot of stuff. Okay, so the snapshot would be that the industry is a $39 billion industry. There's anywhere from 45 to 60,000 facilities nationwide. And the total rentable self-storage space is 1.7 billion square feet. There's 5.4 square feet per person, which is actually a very important number, right? Because we have to be under 8 in order to invest in an area. So in the storage investing world, you're looking at square feet per capita is what you're looking at, and you want to be under 8. And then the percentage of households that rent a self-storage unit is 9.4, and the average monthly cost for a self-storage unit is $87.89, right? That's pretty good. So typically $88 a person when you rent. Okay, and this is actually the facility that I was telling you about. This is the one that we picked up for $150,000. It was an abandoned facility, and we have leased it up in a year, got that thing up and running, and we're making around $5,000 a month right now. And and our mortgage, I mean, our expenses are 30% of that. Typically you run around 30%. So just calculate that, and that is our net. All right, that's our NOI. Okay. Okay, good. All right. I love putting this slide in. You are in the right place. If you want to learn how to invest in self-storage, you are in the right place. We are all here. All the teachers are here to help you, and I appreciate you showing up today. And then we are going to go through all of the departments: the office admin, marketing, finance, acquisitions, management, and liquidations. I don't have liquidations, but that's the last one here. I didn't put that in for today. Okay, so in your office admin, here are the first steps that you need to be focusing on. You need to set up your phone so that you can call and talk to owners, and you can get phone calls, from your, eventually from your tenant, but you need to have a business line essentially so you can make calls. You need to go electronic, meaning that you need to be able to look up all your properties, manage your company from your phone, because a lot of times, you need to be able to manage you need to be electronic, because that's going to be the first step for you in the long run to be managing your storage facilities virtually, right? You want to be virtual. You don't want to be one of these guys that gets up every day and goes and hangs out at their storage facility. All right. You want to be something, you want to be able to manage your facilities from your phone. So let's start going electronic and getting in the habit of doing that. And then also Google Drive. We utilize that for our team. That's how we're talking to each other, is through Google Drive. And that's how we manage our folders. So make sure you're using something like that. It doesn't have to be Google Drive, but you want to be cloud-based. So essentially what I'm saying when I say go electronic and go Google Drive is like you want to be cloud-based in order to manage everything. And also, like, our property management software is also cloud-based, and we can manage that right from our phone. All right, so we can be anywhere in the world as long as our phone works, and we can manage everything. Okay, set up your LLC. All right, so you want to have an LLC because it's a hold, it's a buy and hold, right? So make sure that you have this LLC set up. Build your team. Start building your team up, and that is going to be including people that are going to help you find properties. If it's not going to be you, who's it going to be? It's going to be realtors, right? And then you want to start working on, trying to figure out how you're going to set everything up. So for instance, the people that are going to be the ones that are going to be managing your facilities. And let's see what else. And actually, really, honestly, the way our team looks, I guess I could tell y'all, is we've set our facilities up so that we find them, fund them, and run them. In the very beginning, I did everything myself, right? I found them, I funded them, and I ran them. And that was the very first facility that we had, which was about 150 units. Okay. And then actually the second facility we picked up as well too. So we had around 200 to 250 units before we added on Bonnie, who is our office manager. And she started out part-time working for me. and she helped to like answer the phones and manage all the storage facilities, both of the storage facilities that we had. So around 250 units, we hired Bonnie. All right. And then, so she was on the run them side. So then my job was find them and fund them. And her job was the run them part. Okay. And then as we grew to 6 facilities, which was around 600, maybe 700, 700 units, she went full time and she managed the facilities. My husband sold his home inspection company and he came in and started managing the facilities together with Bonnie. So it's Bonnie and my husband Pete managed the facilities, and he was my husband Pete was the boots on the ground person that kind of went out and managed everything, if we needed to overlock or anything like that. And then Bonnie was like the office person. I still found them and funded them. And then eventually last year I hired Chris, and Chris is our acquisitions person, and his job is to find storage facilities for us. And so we bought 6 last year. So we're up to 12. I think we're in the process of buying 4 more. He's doing really good at finding storage facilities. And so we are so now he finds them, I fund them. My job is raising money. I told you the most important thing is to raise the money. And then my husband Pete along with Bonnie, and then we have also now Patrick and Daryl. And so that is it. It's Chris, me, and then Pete's team to manage the storage facilities. And we have, I think, maybe 12 or 1300 doors, something like this. And we typically buy storage facilities that are around 100 units, 100 to 150 units. Up until now, we've stuck with facilities that are $600,000 or less, but all the facilities that we're going to buy now are $1 million plus. And all we're doing is just 1030. We're selling one facility and then we're going to 1031 exchange it into a bigger facility. Okay. Or we're about to launch a fund. We're going to raise $10 million and we're going to raise that money so that we can buy more facilities. And essentially we started out with facilities that were $150 to $250,000. And now we're up to $1 million properties. And we've only been doing this, for 4 years. We're in our 5th year right now. Okay. And that is how that's how our team has been built over the last couple of years, just to give you a perspective of what it would look like. Okay. And then let me go on to the next thing. Okay, so now we are in the marketing department. You need to pick a market and figure out where you want to focus. You want to drive for storage, right? You want to get out there and talk to owners and drive for storage. The best way to find properties is to drive for storage, all right, and to talk to owners. Now, if you can't drive for storage, right, you can't find time to do that. Which most people don't do this. I do this because I'm like, that's my personality. I want to go talk to the owners and I want to go, look. I say driving for storage equals market research. Driving for storage equals market research. If you're just like randomly calling owners and just like, trying to figure out what you want to do, then it really just doesn't help you get an overall perspective of like what the market looks like. So you want to get out there and drive. You want to be in secondary and tertiary markets. Okay, secondary and tertiary markets. Primary markets are oversaturated. Primary markets are really where you see CubeSmarts and where you see like U-Hauls and CubeSmarts and Life Storage and Easy Storages, whatever they're called, right? That is all primary market. So you do not want to be in those markets because those prices of those facilities, the cap rates are like super low and the prices are going to be more expensive. There's more competition, right? So you want to be in secondary and tertiary markets. And secondary market for me, so for instance, we're in Georgia. We're buying a facility right now in Augusta. Augusta's 200,000 people. I mean, it's not a small town. It's 200,000, but it's considered a secondary market, because it's one of those cities that's like not attached. It's like a city in the middle of Georgia, right? It's not attached to anything else. So, so you want to look for for secondary market cities like that, or you can go tertiary. We also buy in the tertiary markets, which is country, which is the country, like the smaller towns and the smaller cities and stuff too, because there's storage everywhere. So, and it really depends on your price range, right? So for obviously it's going to be more, you're going to have more expensive facilities in primary markets, and then middle type facilities in secondary markets, and then like cheaper facilities in tertiary markets. Okay. Another thing that we do is we go onto Google Maps and we look for a facility. So you can basically go onto Google Maps and then just search storage near me, right? When you search storage near me, then you will find all the storage facilities in your area. Now, obviously, if you're in a primary market, then you don't want to be looking in this area. But if you pick an area outside of the primary market and you just start looking and seeing what facilities are there, you may be able to come across something that is a good buy. You want to look on Google Maps and make sure that all the information is filled out. If it's not filled out, then essentially for me, that's considered a lead. All right. So like if it's missing a website or a phone number or address, or it's like some weird looking facility that's like all dumpy looking or something, then we consider that a lead. And then I will try to either go out and talk to the owner or call the owner or whatever it is to get a hold of them as well too. So you can also use Google Maps to find facilities. Okay. And again, I said you want to find motivated sellers, right? So like I said, the storage owners are unmotivated. So motivated would be like if there's some sort of an issue, like if they're not managing it properly. So basically in the industry world, there is motivated sellers and mismanaged properties and income producing properties. Mismanaged versus income producing. Mismanaged is just like dumpy storage facilities or facilities that are just not making any money. If they're not making any money, or if they're like 50% full, if they're typically less than 75% full, they're considered a mismanaged facility. And a bank will not lend to them, right? So you have to raise money in order to find, to buy these things, right? So a bank will lend to an income producing property. Income producing properties are exactly what it is. They'll be able to give you a P&L and a balance sheet. They'll be able to give you all the numbers and show you, how they've been running their facility, because a bank is going to require that. In order to get the lowest interest rate, you always want to go to a bank. Banks are typically around 4 to 5% interest rates, whereas private lenders are going to be like 8, 9, 10, 11, 12% interest, right? So what you're going to do is now that you have an idea between mismanaged and income producing property, you can start thinking about, which kind of facilities appeal to me the most. But the truth of the matter is that when you get out and start talking to owners, you're really not going to know if it's a mismanaged facility or an income producing property, because we have facilities that they're not dumpy looking, but they're not like the most beautiful storage facilities in the world. And they're all income producing properties. Okay. So we will be able to show our P&L and our balance sheet when we sell these things and make sure that we can get them for top dollar. Even though they aren't the best of the best, most beautiful storage facilities with gated facilities and all this kind of stuff, what I'm saying? So that's the one thing I love about commercial real estate as well too. So basically in commercial real estate, it really depends on if it's a primary, secondary, or tertiary market. And then it also depends, because you need to know what the cap rate is for each of those, right? So primary, secondary, and tertiary market. And then it depends on whether or not it's an income producing property or a mismanaged property. And depending on those situations is how you're going to run your numbers. Okay. Okay. All right. So what I love about storage too is that your marketing budget is like almost none, right? So my marketing budget is time and effort. That's what it is. Okay. So like Chris, our acquisitions person, all he does to find the facilities, and he's gotten 9 under contract in the last year. All he does is drive for storage and use Google Maps to find facilities. That's exactly what he does. Okay. So that's the one thing I love about like the commercial side is like buying lists and sending out letters and like doing all the stuff that you're doing on the residential side that costs so much money. You don't have that. In the commercial side, it's really more just time and effort, because it's all about know, like, and trust, right? So the owners need to know, like, and trust you. And if they do, then they're going to sell you their property. And if they don't, then they're going to just be like, nah, I don't want to sell. I'm going to give it to my son or whatever. Okay. All right, acquisitions. So the next department, right, is your acquisitions department. And this is where you're going to learn how to run, you have to learn how to run commercial deal analysis. All right. So commercial deal analysis is completely different from residential. All right. You need to learn what cap rate is. You need to learn what cash on cash return is, yield is. In the storage investing world, you need to understand what the purchase price is, what the vacancy rate of the property is. You need to know what the expenses are going to be for that property and what the total income is going to be. Plus really, what is the competition going to charge? And what your total square footage and your unit mix is. So when you start looking at all those numbers and looking at how the whole picture comes together, that is how you run commercial deal analysis. So essentially it's like talking to the seller and gathering all the information from him that you need so that you can run the deal analysis. When you run the deal analysis, you look at like not only the numbers that they give you, but also what the competition charges and what the opportunity of that facility is, right? So the opportunity could be that you're increasing the rates or that you can add new units, right? That's basically the two opportunities. But sometimes there's opportunities like adding a sign or cell tower. There's a lot of storage facilities that have like cell towers and signs on them or whatever. So, but yeah, so the opportunity is like really increasing the rates and adding new units. So when you look at all that, you have to look at the overall picture of what the facility looks like, which is your as is, right? As is right now, what is it worth versus your value add worth, right? And then when you look at that, essentially you come up with the value of your property. All right, so that is acquisition. So learning how to run the deal analysis and then getting all of the information that you possibly can in order to run that analysis. Now, on a mismanaged facility, they may not have that. So for instance, right now, I have a facility under contract for $1 million. And the owner is telling me that he's making $150,000 a year. All right. So if you think about that, if he's making $150,000 a year and he's selling it for $1 million, you would think in your mind that that's an income producing property. But the truth of the matter is that he's only been taking cash for the last 5 years. Only cash. He doesn't take anything but cash. All right. So he has no tax returns. He has no P&L. He has no balance sheet. He has nothing. In fact, I asked him for his balance sheet and he said, "What's a balance sheet? I have no idea what that is." All right. So even though he's making $150,000 a year, it's considered a mismanaged property because you cannot take it to a bank and get it financed. Okay. So you have to learn how to raise. So how do you buy a property like that, right? That's the question. How do you buy a property like that? That's where you have to learn how to raise the money. You have to learn how to do creative deal structuring. You have to talk to private money lenders or hard money lenders, commercial lenders. You talk to everybody that you possibly can to try to figure out how to finance deals like that. It's easy to go out and get a loan for $300,000 or $400,000. How do you get a loan for $1 million on a property that is not making, there's no proof of the income that it's making? So that is where raising money comes in. So on the commercial real estate side, you must learn how to raise money. If you do not learn how to raise money, then you are going to become overextended, and then a bank is not going to want to work with you, all right, more than one time, right? And so learning how to do creative deal structuring. Creative deal structuring means like either getting the owner to owner finance it into you, or or partnering, doing equity partner structure. So we do a lot of equity partner. So a deal like this $1 million facility that's making $150,000, essentially I'm right now in the process of talking to several people, and we will come together and create a company in order to buy this thing, right? And then we will partner together. Another thing that I could do is I could put this into my fund, right? So the fund that I'm about to launch. This is the perfect deal to go right into the fund, and I could just crowdfund that money and buy it. Okay. So there's a lot of different ways. You just have to learn how to do them. And I know it sounds a little bit complicated, but the truth is that it's really just like learning anything else. You just have to learn how to do it. You just have to educate yourself on how to do all these different structures. And then finally, management. All right. So management is like the most important part of buying a storage facility. Management is basically how do you actually run this business so that it is truly passive income, right? All of the facilities I buy, the owners get up every day and they manage their facilities. They go there, they meet the tenants, they do this is their life, this is their job. They're one facility that they manage all their lives, right? But this is not how we do it. Essentially, we want to learn how to scale up and to grow and to be totally hands off and delegate everything and not be there every single day telling people what to do, right? And so that is one of the main reasons why I decided to move into an RV, is because we needed to be away from our facilities so that we could learn how to manage them passively. And the way that you do that is you train your tenants, number one, right? So you are the one that puts their foot down. You can't let them take advantage of you. All right. You can't let them give their sob stories about anything, right? So these are our rules and this is how we follow it. And if you don't like it, then you're not the tenant for us. All right. We're running a business and this is how we run our business. And that's what I call training your tenants. I also do what's called rip the Band-Aid, right? As soon as we buy that facility, if they're not charging what they're supposed to be charging, we rip the Band-Aid and increase those prices. All right. And then everybody complains about it, but guess what? Nobody leaves. All right. They just complain about it. So you have to go through the whole process of just listening to all them complaining. All right. But the truth of the matter is, like, we just bought, I think we got like 350 units in the last 90 days. We raised all the price, double the prices on every single one. And out of 350 units, we had 8 people move out, and that was it. All right. So that's another thing that we did. We are all electronic. You already know that. We are completely contactless. You have to understand your auction laws. You have to understand how to do this. This is actually a whole process that your state creates that you have to follow. I bought a facility once where they just made up their own rules. They were like, we can do this. We can open your door and we can get anything out and move your stuff out if we want or whatever. But you can't do that. You can't do that unless you actually go through the auction process. So learn your auction process and learn the tenant laws of your state, because these are very important. You want to make sure that you follow those. And then you want to learn how to scale up, right? That's the next step, is how do I buy other properties? After I get this one stabilized, how can I get out and look at other properties? And so that is the management side. All right. And again, so I teach self-storage on the first Tuesday of every month, and I do the beginner investor session on the third Tuesday of every month. So that is self-storage 101 in a nutshell.
Thank you for listening to this episode of REI USA. Let these golden pieces of advice clear your path towards thriving real estate success and start making those amazing financial opportunities work for you. If you liked this episode and want to get more of these valuable secrets, be sure to subscribe to the show at www.rei-usa.com. Leave a rating too and share with your friends. Until next time.